This week, Ben and I are going to talk about some macroeconomic factors that are shifting, some differences on the import levels, and then maybe some adjustments coming up for USDA supply and demand reports. Hello and welcome to Brownfield's weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Good morning, Will. I'm doing okay. I gotta admit, I'm a little sluggish. Last night, Kansas City had two big games. Both the Chiefs and the Royals played on a Monday night, and I just have to wonder, don't they know that we record these first thing Tuesday morning? They shouldn't do this to us.
little groggy, but it was an exciting day for Kansas City sports and Missouri sports in general.
Hey, I'll take a win as a win, right? Both teams won, coming home in the division series for the Royals. A lot to be excited about.
There you go. Well, talking about some things to be excited about, we did see a couple of light gains in the market, but overall kind of flat to slightly down. Got to give a quick rundown on the week's shifts and prices. December 24 corn up 2 cents at 4.26. December 25 corn up 1 cent at 4.55. November soybeans down 13 cents at 10.34. November 2025 down 14 cents at 10.80. Soybean oil on a cents per pound basis for December up 1.26 cents at 44.57. December soybean meal by the short ton down $16.80 at 324.80. That December wheat crop for 2024 up 8 cents at 592. December cotton was flat at 73.53 cents per pound. Then that West Texas Intermediate crude oil contract up $8.75 a barrel at 76.63. So Ben, a lot of flatness, but then also some moderate to slight to moderate losses, and then some very, very moderate gains there. So what was the picture really telling you as we start a new week here?
Well, I guess the rally was, I guess, destined to end at some point, right? Like they all kind of end at points down the road. And so I guess we've reached that point on the soybean market, down 13 cents week over week. However, this morning, as we're doing this Tuesday morning, soybean markets were down 18 cents overnight. We started the month of September right at $10. Here we set the 8th of October and we're $10.18 this morning. So we still, that rally still gave us an 18-cent bump over the last 5-6 weeks. But, large story short is we saw the weather rally kind of lead us higher. Now it's kind of leading us lower.
Well, Ben, just looking at the general picture as we see it in front of us, we're going to start off today's conversations just talking about some general economic factors. And, in the weekly write-ups that you put out, you talk about the overall economy seems to be, in a better place now. It's kind of humming along at this point ahead of the election. What factors in the general market and general economy should farmers really be paying attention to that are kind of swaying these markets just a little bit left and right?
Yeah, this is a great question, and I think we're going to talk about the Commodity Futures Trading Commission data here in just a second, which is really kind of how the broader macroeconomy impacts agriculture, along with interest rates, along with off-farm labor opportunities. Those all kind of fit together anymore. And go hand in hand with agriculture. We had a couple of key macroeconomic data that came out last week. I'll just kind of highlight a couple of points I want to make real quick, and then we can talk about what this means regarding, how this matches up with sentiment. But I'll start with the job openings and turnover rate in August. That report showed that there was just over 8 million jobs opened at the end of August, and the July number was revised higher as well. And so both those numbers were higher than expectation. It suggests that companies are continuing to add jobs to their workforce. They're continuing to look for opportunities. When we look at the September jobs report, this came out last week, the non-farm payroll, so this is the number of jobs created in the month of September, came in at 254,000 jobs in September. That was up almost a little over 100,000 from where the expectations were for the month. July and August both were revised higher as well. And so a lot of jobs added over the last 3 weeks, largely across all sectors. There was only 2 sectors that really saw month-on-month declines. That was manufacturing and transportation. Nearly all the other sectors saw month-over-month job increases. And then that translates into an unemployment rate. So the unemployment rate fell to 1.4% in September. That was down from 4.2 in August, also 4.2 was the expectations heading into the day. Hourly wages were up, on the year. So last month we had a yearly increase of 3.9% in those hourly wages. In September, that jumped up to 4%. Excuse me, we had 3.8% year over year wage increase in August, and that jumped up 0.2% to 4% in September. So what that summarizes, Will, if I can just run through that, all of those signal that the economy continues to add jobs. We're not seeing the broad layoffs that would signal a recession. The unemployment rate, yes, moved higher over the last couple of months, but is starting to work its way lower again. And the Federal Reserve has indicated that this, shoring up the labor market is its prime objective, and it seems to be doing that, at least in this last round of data.
Well, and this wasn't, I guess, really a part of that data, but just on the labor front, the shutdown on the port worker strike seemed to be pretty short-lived there, as far as how long that kind of stuck out. So maybe some port closures didn't really fully come to fruition like we might have thought, and that was avoided at least from the ag shipping standpoint.
For now, yeah. For now, it's only a temporary bridge till January 15th, and then we'll go through the process probably. I don't know. You hope they come to some type of agreement before then, but certainly January 15th is that new date now.
Yeah. And looking generally at the other data you're talking about, the Commodity Futures Trading Commission data, it looks like there's a big shift in the short position. So a lot of traders buying back in, taking more long positions. So Ben, what is this telling you whenever you see that shift, maybe toward people kind of re-entering the market? Maybe that kind of signals that maybe at some points in the commodity market, a lot of these prices kind of hit what their potential lows are, and maybe there is more to be gained moving forward.
Sure. So I think in simple, like a simplistic view here, there's a lot of other factors that impact this, obviously, but I think we're seeing a big reason why commodity markets have rallied over the last couple of weeks. It is this managed money buying back into the market, or at least covering their short positions. That's allowed this market to move higher. That's allowed producers and merchants to get some covering on their positions as well, get some sales on the books. And that's exactly what the data, at least through the most recent week, which is October 1st, so the end of September. But that's exactly what it has suggested, is that managed money traders are not near as short as they have been for the last several months. In fact, collectively across the complex, they're now only net short 34,000, let's just say 35,000 contracts. That compares to being net short 663,000 contracts just 2 months ago. So a pretty strong net short covering here. This is given the opportunity for producers and merchants to get some coverings on the book as well.
Well, Ben, turning the page into the international markets, some estimates on Chinese imports look like there's an estimated drop down to 20 million metric tons, a 4 million metric ton drop on corn imports looking at this coming marketing year, I guess now that the current marketing year. What is this signaling to you whenever you see, a fairly substantial drop in corn imports to one of the biggest buyers in the world?
Well, so that's in some ways concerning. China has not, historically bought a lot of corn. It's kind of the silver bullet or the golden goose, whatever you want to call it. I think for a lot of people relative to the corn market, there's always this notion that if we start seeing purchases to unknown destinations in the corn trade data, that the hope is that it is China, and that's going to send the markets drastically higher. We haven't seen that the last couple of years. We had the one big year. We haven't seen that the last couple of years. I think China is being pretty strategic, I think, in their moves here. They are increasing, corn used in feed rations. Sorry, I can't even talk this early in the morning. Corn in feed rations, and part of that is just the relative prices to both wheat and feed rice. And so we thought maybe with a little bit higher corn feed use and a little bit of a drop in production due to some rains that we've seen inland China, that we might see a little bit more corn imports, and that's just not been the case. It's really been met with, the domestic uses. I think China has given an indication that they would really like to increase their domestic production of feed grains, specifically corn and even soybeans, over the next couple of years. And so it's just really hard to get in that market. And then, even if they were to increase their imports of corn, they have no preference for U.S. corn, and they have been buying, the cheaper Ukrainian corn or Brazilian corn for that matter. So, yeah, not good news, I guess, on the Chinese corn front.
Yeah, well then, Ben, shifting over from potential sales to potential supply, USDA could be revising some of its supply numbers and production numbers for U.S. production coming this Friday, looking at a potential increase for corn and maybe one for soybeans as well. What do you think that the shakeup could be this coming Friday in that USDA report? How important do you think this is going to be?
Yeah, so this is an area where I think we're seeing a little bit of disconnect between private estimates and then, well, really just across private estimates, right? So the first of the month, we always get a range of customer surveys from private companies. Many of those last week were suggesting that the corn and soybean crop was getting larger, especially on the corn side, as more and more combines got into the field and yield monitor reports were coming through. It was, customers were reporting good yields on the corn side. However, the average trade estimate for Friday, when we get our USDA report, is actually for a little bit softer corn and soybean yield and lower corn and soybean production. And so we have this rather large range in expectations heading into the October report. And I think this just speaks to the variability that we're seeing across the country, even within a county and frankly, even within townships. There's quite a bit of variability in this crop based on when it got planted, of course, when it was pollinating relative to the rainfalls. And so, at least the average trade estimates heading into Friday's report suggest smaller corn and soybean crops, but there are quite a few private companies and analysts out there that have corn yield and soybean yields increasing sometimes as much as up to a bushel per acre, which would be a large jump in October. Yeah, that would be a large jump in October. I'll remind our listeners out there that the October report is when USDA incorporates that September 1 grain stocks report. Both of those numbers were lower than expectations, or what was it in the September WASDE report. So, we're going to start off with lower beginning stocks for new crop. If we do see this lower yield, that actually pulls us below 2 billion bushels on the corn carryout for 2024, 2025. I think that's a pretty solid psychic, or that helps with the psychic nature of the market in that we're under 2 billion bushels. And
a potential bullish factor going forward, maybe as harvest starts to wind down some. Ben, looking forward into the week, what should farmers and ranchers really be paying attention to that could move the markets?
Yeah, so we've got some more economic data that comes out the end of this week, the consumer price index on Thursday, the producer price index on Friday, of course, those USDA production reports on Friday, along with cotton ginnings and some demand estimates as well on Friday. Reminder, the market is closed next Monday for Columbus Day, and then Tuesday, we come back with our normal Monday reports and the September National Oilseed Processors report to get an idea of what we crushed for soybean oil and meal in the month of September.
All right, Ben, it's always a pleasure to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.